For now, we are going to talk about the future or the outlook of 2022. Thank you very much, Najib Arif. Let's focus on that graph very shortly. On the line right now is the ever ready Hann Liew, the co-founder and director of RinggitPlus. Han, as you heard just now, the conversation of how PNB had to perform under an unprecedented situation where both fixed income as well as equity, both globally and domestically, has registered negative returns for this year. One wonders what is in store for us for next year. Let's pull up that particular graph that was shown just now. This shows two things as far as I can pick up. Number one is that global asset allocation has risen from 17% to 19%. It's always great. But the second thing is that the cash position for both domestic and global is also long. 3% last year, 7% this year. Does that also bode well in terms of how the investment strategy for PNB is going to look like? Are they long on USD? Are they shorting ringgit? Are they long on global investments, particularly equity in public listed global as well? Are they short on local equity? Han.
Morning, Ibrahim. That's quite a lot there. I think the news on ASB was taken, you said it perfectly, which is totally understandable, right? The market's been very tough. This year, 2022, has been one of the toughest years for global markets. I think Najib showed that graph where there was nowhere to hide, right? You know, equities 20% down across many markets. You tried to hide in bonds. You're also down, in double digits. And I think for PNB, tough environment, especially given their mandate, right? Their mandate is to ensure long-term returns for their deposit holders. For me, it looks like they've tried to stay invested in the local market. You can see very steady in terms of exposure, right? 60% is a lot to invest in the local market. I think that could be a mandate direct. And the most interesting thing you pointed out was cash, right? The foreign cash went up from 3% of the global allocation to 7%. Sounds like a very tactical move, but actually it could be as a result of number one, the strengthening of the US dollar this year, coupled with a bit of ringgit weakness alongside. So that could be the cause of the increase in what looks to be increasing cash position for PNB, perhaps also getting ready for deploying more cash next year.
Okay, it's not just about PNB. It's not just about ASB, the fund. It's also about PNB in general and ASN, where 300 billion ringgit is being deployed. It is also indicative of how other funds are currently being deployed as well, either at QAP or EPF. Do you feel that the aggression or the aggressiveness for them to continuously invest overseas has to be intensified? Because there's only so much that you can invest domestically. And I really don't buy that whole argument of you're depriving of local direct domestic investment. You really need to grow your money any way possible you can. And if it means increasing global asset allocation by whatever percentage now, plus 2 or 3 percentage point moving forward, that has to be done. Do you agree with this kind of view?
Yeah, I think you've got to be very clear about your mandate, right? So we already have obviously the federal government putting fiscal stimulus in. We already have Kerajaan national, whose purpose is for national development, right? But you look at what the purpose of people like ASB, or in a sense PNB, or people like EPF, KWSP, or KWAP, their objective is to get the most returns given the risk parameters they have for their depositors, for their members, and that should be seen in entirety, right? Which is, hey, look, we need to find the best returns regardless of where they may come from. So for me, if over the next 10 years or so it comes from investing overseas, so be it. We need to do the best we can for the people that are with us, right? You have to remember that these kind of three big public investment vehicles, they invest for the public, not necessarily for the country, but for the people, right? And the second part to that is that people contribute to it every year, which means in a ceteris paribus, all else equal world, these funds will continue growing. growing beyond the capability of our local equity or bond market to absorb. So we need to look overseas purely because of that as well, right? It's not just a case of diversification, higher return. It's also because the size of these funds are starting to grow way beyond what our local capital markets can and should sustain.
There's also the whole idea of the position of cash. Do you feel that more cash needs to be deployed? Holding on to cash or holding on to foreign currency is one idea, but having 7% out of 340 billion ringgit AUM asset of cash means that you're not deploying it in strategic assets, both either fixed assets or equity. Are you okay with this kind of cash holding, not just by PNB, but perhaps eventually by EPF as well? We need to talk about them sooner rather than later when they announce the earnings for this year.
I think in 2022, having a bit of cash on hand is not a bad thing. We've seen that throughout, not just because of financial markets, but specifically to Malaysia because of things like folks removing or folks withdrawing from EPF, folks needing to tap into their ASB funds perhaps because of emergencies or whatever it may be. It was probably right for these funds to have a little bit more cash than normal at hand because they were preparing for these kind of withdrawals. It was a very, very uncertain couple of years. So it's probably the right move to have a little bit more cash than normal. But going into 2023, kind of the emergency part of the pandemic has started to wash away from us. We're starting to recover. Now is the time to kind of think about redeploying your cash, looking at your liquidity position and saying, hey, look, like that kind of very acute emergency, people withdrawing money, the right withdrawing in large amounts is probably over. It's time to look at redeploying that cash, looking away from just pure liquidity needs into long-term asset allocation that you had before anyway.
On top of this, outside of PNB, KUAP, EPF, and other Insti investors, we're looking at FDIs and FDI inflows into the country. A lot of data has shown that FDI inflows in the country has been drying up. And to put in contrast, our neighboring countries, a lot of FDIs are flowing in as well, particularly Vietnam and Indonesia. Of course, there's also the whole idea that we're having a new government, we're having a new paradigm shift. There's a lot that the government is promising that they will do. Time will tell whether or not they are able to execute these kind of ideas. Also, what needs to be said is the political risk and whether or not it has been abated and whether foreign investors are looking at us still at a high risk profile when it comes to political risk. And the third idea that I want to toss into the picture right now is our neighboring countries are much more competitive and are built structurally to be more competitive than us in the years to come. Where do we stand, Han, when it comes to attracting foreign direct investments in the near future, especially next year?
You raise a great point, Ibrahim. I think we have seen foreign direct investments. I would say be not a bit lackluster. But what's not shared is that actually, if you look at what foreign direct investments been approved, it's actually at a multi-year high over the last 2 years, right? So we need to look at that gap. Why are there so many foreign investors or foreign companies looking to invest in Malaysia being approved, yet not actually carry out those investments? Is there a time lag? Is there an issue with execution? We probably, one thing I would say to the government is have a look at that. Like, we're doing quite well in terms of attracting them to make those calls and say, hey, look, would you like to invest? We'll approve you, get them approved. But the subsequent flow actually into the country is a lot less. So maybe there's kind of a little bit of project management needed on that side. We're doing well on the front end. Just need to carry those investors through to actually execute those investments. So that's on FDI. On political risk, I don't have a specific view at the moment. It was good that we have a government. It was tested in Parliament. Now I think if I was a foreign investor, I want to see, hey, look, like the budget, the mini budget passed. The next kind of hurdle in terms of political stability is the big 2023 budget, probably in February, where they retable it again. If that passes, then that sets the tone for a little bit more political stability. If I was a foreign investor, I'll be waiting for that. And third, I think you mentioned about structural advantages that our neighboring countries in ASEAN have over us. Honestly, the number one structural advantage that the big 4 or 5 have over us is demographics, population. But we have so much more to offer a foreign multinational foreign investor, whether it's capital investment or or financial investment. We have, a fairly sizable country. We have everything that we need to invest here first before going to the rest of ASEAN. What I mean by that, right? So in the Klang Valley, we sort of have a mini Singapore, right? Lots of multinationals here, large English-speaking population, fairly well educated. It's like a little Singapore here, right? We have, in the suburban rural areas, very similar to Thailand, right? Highly agricultural, lots of little towns in the rural areas. So it's a bit like having a Singapore and then a big mainland Thailand around it. And then we have East Malaysia, which all the challenges around logistics, around transport, people and information are similar to what the Indonesians or Filipinos feel, right? In terms of ability to traverse the oceans, right? So for any multinational, I'll say, hey, look, like Malaysia is like a little ASEAN. Come and invest here first, right? Do your tests, do your pilot projects, do your hubs here. You can have, you can test on an urban audience, you can test on a rural audience, you can test, across the seas, how your businesses can perform before you then tackle the other parts of ASEAN.
Han, two ideas I want to explore before we conclude our conversation this morning. Number one is, of course, the rising interest rates. We don't know the terminal stature of the interest rates here in Malaysia as well as US Fed. And of course, number two, domestic consumption, considering that inflation is rising across all segments. And of course, whether or not we're going to be able to see wage increases in the years to come. Do you feel that inflation and domestic consumption is going to be impacted for 2023? Also, where do we stand in terms of the rising interest rates? Do you think that central banks across the world and in Malaysia is going to finally reach that whole desired interest rate levels that they have targeted for the longest of time right now?
I think the best way to describe inflation is that it's very much a 2022 story, right? Across the globe. And what we'll see is we're already seeing this last quarter inflation start to moderate. Now, it's because of the base effect, come off a high base, and every month we keep printing, still high inflation. But if you think about it, if you look at the last kind of 3 to 4 months, right? Inflation in that 3 to 4 months actually it started to look like normal, as normal as you can be, i.e. not in a kind of emergency inflation, huge spikes in inflation anymore. We had that huge spike at the start of the year, the first half of the year, and then now we started to kind of moderate a bit. So the year still looks bad, but for me, going to 2023, I think what we should be looking at is not so much inflation, but recession, right? Global recessions, which will, on one hand, kindly solve the inflation problem, right? If it was still there to be solved. But if there wasn't that much inflation anymore, which there isn't over the last 3 or 4 months, then it might actually cause the opposite, which is we're starting to look at deflationary scenario, depending on the depth of the global recession next year. It could happen as soon as first quarter, probably second quarter. So for me, like the story of 2022, very much inflation. The story of 2023 absolutely needs to be recession, and even possible a moderation of that inflation.
All right, thank you very much, Han. Any final word, Han, in terms of what are you going to do towards the final week of the year, and of course, what's in store for you guys at RinggitPlus for next year?
I mean, the team at RinggitPlus obviously are just closing out the year. It's pretty quiet for us. It's going to be quiet all the way to CNY actually, because we're very much based in Malaysia. Me personally, going to try and enjoy the festivities as much as possible. Haven't had a proper Christmas for a couple of years.
Oh wow!
Yeah, because of pandemic-related things. So probably going to spend good time with family and friends, and usher in the new year on a hopefully much better note than we did the last 2 years.
I mean, I hate to say it, but I don't want to jinx it, but it can't possibly get worse than 2022, right?
Oh no, you didn't say that.
I just jinxed it. Dude, you got to start wearing the Santa hat the way Aaron did just now. Then your life and your year will be more merrier.
Yeah, hopefully. But let's hope for a better 2023 than the last 2 or 3 years. It's been rough.
Fantastic. That was Hann Liew. You can follow his tweets, actually. And of course, RinggitPlus's coverage at RinggitPlus.com. There's a lot of items that can be covered there. They cover not just personal finance, but of course cover market views as well.